Hey traders, good evening. This is the 26th of June, 2024. Crash Alton here with the Impact Trading System. I've got one of our traders, Matt, on board, and we're going to just talk about the Isnipe system and specifically looking at trade entries. We have a system where we are sniping off of our ITS, Impact Trading System, ATR lines. And what we've been teaching is so that people don't have lines blow through a price. We use the term learn to earn on the turn. And so when people are beginning, we ask them to wait to see a fractal, a Bill Williams fractal develop on a specific line. So you can see maybe a trade entry right here, our price comes down, we want to see a reversal. And we want to see that fractal develop, which happens at the close of the second candle. You can see it over here on this ITS 45 line. Price comes down, bounces up at the second candle, we get a fractal. That is confirming to learn or earn on the turn. The problem, however, is if you're only able to get 10 points out of a trade and you wait for that fractal to develop, and then you're between your brain, your eye seeing, your brain processing, and getting your hand to pull the trigger to buy, you may be 3 to 5 points into the trade, and now you only have maybe 3 to 5 points to take some profits. So sometimes it can happen fast. So this discussion is about how to get people better at sniping, better skilled, getting into entries earlier so they can take profit sooner. So Matt, let's just talk a little bit about what you've observed and noticed and what we have all struggled with getting better at and what you have seen by trying a couple different techniques. So why don't you just kind of run through what happened with today and what you've seen and what you've practiced?
Yeah, so some of the trades that I was in today, I noticed where by the time the fractal developed, like what you had mentioned before, you could see in some cases a 3 point or more difference in that entry. And so I had a few trades today, specifically in the early part of the day, around the bear 31 and bear 35 line, for instance, where I ended up going short. It was a first touch. It was a very long-standing 31 and 35 line, so the support had been there for a while. I was able to capture 3 points, but the other two contracts ended up failing and getting me stopped out.
What time? What time
And
was
what
that?
that was at 6:48 today.
All right, I'm just gonna go there while you are talking.
Yep. And what I noticed is, in trying to keep, obviously more profits than losses, and also trying to keep the stop loss within a reasonable level, to not get, chopped up in some of those trades that might be, going against you. It seems like the better entries are when you can get an entry either right at the line or within like a point proximity to the line, which makes sense because the numbers where the lines are on the chart are where the pivot point is, and so it makes sense. Obviously, that the closer you can get to that line on an entry, the better off you're going to be. What I found is that you don't necessarily wait and can't necessarily wait for the fractal to fully develop. You kind of have to take a little bit of a risk. Although if price is, in our time cycle, it's moving in a trend direction, or maybe it's in a, Wyckoff spring consolidation range where you can bounce back and forth. Those seem to be, really good entry points with really high confluence where you're able to easily get the 3 to 5 points and either bring your stop to break even, so you don't get, sliced up if price goes against you. But what I did today specifically to test it was when price would approach a line for the first time, I would take the trade when price reached that line. I, instead of having a 12-point stop, moved it to 5, just in case it way overshot or there was heavy momentum that came through. At least I was only taking a 5-point risk. But really, it only happened to me like maybe 2 or 3 times where it excurted and took me out. But the next trade, I was able to get 3 to 5 points. So it was like I traded one bad trade for a good trade, and then I was back on my feet again. And as I was doing that, I noticed that my entries were better. 3 to 5 points was almost a guarantee. And when it reached 5 points, I would bring my stop to break even. And then I wouldn't stress about it. And if it ran up, then I'd trail it. And sometimes it would stop me out. Sometimes it would maybe get to like 10, 11 points and then reverse back and stop me out. But at least I still walked away with 3 to 5 points of gain and then just waited for the next trade. And I noticed that that really worked incredibly well, at least for me. It required quick fingers, of course, but I guess the thing that I want to learn is, okay, if we're not going to necessarily wait for a fractal, and maybe take a little bit more of a risk with that trade prior to a fractal forming, what are some of the key things to look out for? And is the stop justified at 5 points, or should it be closer to 7 points? Is that something where we look at ATR to determine whether we maybe increase that stop range, and just kind of what your thoughts are? Because it seems like if you could really get that down and get really good about the lines, you can trade it in a lot of different ways, especially when times are maybe not moving as quickly, and you're in maybe a slog time or more of a consolidation period. I mean, consolidation periods were huge for me. I mean, I would capture 7 moves in a consolidation period, and trading 3 minis, I'd be up anywhere between about $110 to $240 per move, when it was consolidating. So just really kind of curious how you approach that, and what you would recommend as far as a TP and stop loss.
Yeah. So great question. We've addressed this a couple other times, but this is really good to address it again, because a lot of people have a lot of issues with this. And what I want to make sure is that people understand that you have to measure the rhythm and the speed of the market. Okay, and we do that by 2 different techniques. The first one is, I'm typing on here right now. All right, the targets that we normally do is when our ATM strategy, when it's normal or fast. Okay, we can do this system and easily get 10, 12, 8, 10, and 12 points for our first 3 targets. So say we do 3 MNQ or 3 NQ minis, we can get 8, 10, and 12 points with no problem. We use a stop of 12 points. If it's a slower market, okay, and again, I measure this by 2 things, okay, the volatility, the VIX, okay, and the 1-minute ATR, average true range. If the 1-minute average true range, okay, like on a summer day, during the slog time, which is the lunch time when Wall Street guys go to lunch, and that is basically after between around 11:30 to 1 o'clock Eastern Standard Time, or for those of us on the West Coast, after about 9 o'clock a.m. to about 11 o'clock a.m. Okay, that's the lunchtime when everything starts slowing down. Less people are trading, less volume. It gets a little more choppy, and that 1-minute ATR a lot of times really slows down. So if you see the 1-minute ATR, all right, greater than about 11 points, okay, 11 to about 16 points, that would be what I would call kind of a normal range. If it is, and that would be with a VIX, all right, less than 15 for right now. If the VIX starts going to where it's greater than 18, or relative where it's at right now, so let's just say it's 13, 14, maybe right around 15, if it's the VIX is starting to hit key response areas like Fibonacci levels of 50%, a 61.8%, or maybe a Fibonacci target of a minus 23.6, then you're going to see more of a reaction, and that 1-minute ATR is going to change. And that 1-minute ATR is going to go from 11 to 16, maybe to like 17 to 23, for example. Okay, and anytime I say basically don't trade is when the VIX is over 18, okay, over 18 or over a 25 points per minute average true range, points per 1 minute movement, because it just happens too fast, it's too squirrely, the bounce is too extreme. So in our time frame right now, we would do, coming in prior to the summer, we were using 8, 10, and 12. Well, now the summer months are here, it's gotten slower. A lot of times we're seeing that 1 minute ATR be less than 11, so 10 or 10 to 5 points. We have to change our targets because you're not getting as big of a spring action, okay, which impacts how quickly you can take profits. So our system is designed to use 10 points as the cutoff. If we can take a trade where we have the line, we're playing ping pong off of our ITS lines, if we can get a bounce off of them, we want to take maybe 5, 7, and 12 points now instead of the 8, 10, and 12. Well, by the time your hand sees this reversal, or your brain sees a reversal and tells your hand to buy, again, you're now 3 to 5 points into it, and you may only have a couple points left to get that move. So in our system, we call it a valid trade if the entry is on the line or within 3 points of the line with that fractal, and it moves at least 10 points. All right, we have to have a black and white system of measuring whether a trade is valid or not. Now this looks kind of small because we have a lot of price action crammed into the screen, but you can see that from here to there is a 19-point move. So let's say you miss 5 of it, right? Now you only have maybe 10 to 11 points, 12 points, somewhere in there that you can actually get it. Let's say that only ended up bouncing 12 points and you didn't get in until 5 points, right? Or it moved only 10 points, the minimum for us to call it a valid trade. You only have the ability to maybe get 3 to 5 points, so that's where you may want to change your ATM. So it may be 5, 7, or 12, or it may actually be 3, 5, and leave the last one as a runner 12 to 15 to see if you can move it up as if price actually does start to spring more. But what everybody has to do is, because there's a lot of spaghetti on the wall and people can't see the forest through the trees, I force them to wait for a fractal so they can actually see a reversal in price change before they get in, so it doesn't turn into a situation like I actually got caught in, because we're going to talk about this here just a little bit more. I tried to pre-run it and just buy on this level to get a better entry, to get a bigger bounce and have more points. The problem is it flushed against me, and that's what I don't want it to do, because then people are like trying to catch a falling knife. And so in order to not catch a falling knife, I want to see a fractal. However, as we get better, you may not have to wait for a full fractal to develop. You may just be able to see the price just starting to bounce in reverse, but so that might be your buy entry right there. Now you've saved an additional 3 points, and if your first target's at 3 points, you already got your first target off before you ever would have if you waited for the fractal. So it can make a really big difference, particularly if you're trading the NQ versus the MNQ. Now I like people to learn off the MNQ, but if you're doing a $250,000 prop firm, or you have a $50,000 account of your own, your personal money, then you can start using some minis as opposed to micros. But again, we want to learn on micros, learn on sim, then learn on micros, then move to the minis. But like what you have seen today, when that move is a little bit more shallow, like this one right here, right, you're only getting, if you get in at the end of the second candle and then it moves right there, you're only getting barely 8 points out of that, right? Yes, that's a 10
That was one of my
move.
losses today on that one.
So you've got to be able to get in quick, and that's part of becoming an expert scalper, is being able to process the price bounce and get in before the fractal develops. Again, the fractal is there to help beginners see, to learn to earn on the turn so they don't catch a falling knife like over here. So what you have been doing before was 8, 10, and 12. Now the summer months have come. You reduced it a little bit, but tell me exactly again what you found effective today.
So today I found effective 3 and 5 point targets with a 12 point runner. Okay. So what I found is that when, and we'll use that example that we just talked about on the 15 line right in front of us at 8 o'clock. If I would have taken that as I dissect it, if I would have taken that bounce instead of waiting for the fractal to form, but took it right as price started to stall, I would have gotten 3 to 5 points quickly, and then my stop would have been at break even, and I still would have been able to capture 3 to 5 points, even with a, quote, I don't want to call it necessarily a failed move because there was profit to be made, but you can see it only went like 8.5 points. And so I still would have been able to take some profit as compared to getting in late and then getting stopped out and trying to wait for the next 20 bounce, which excurted, so it skipped on that one, and it wasn't until the 45 that I was able to get in and recover a little bit. But 3 to 5 was great because it was like instant. It was crazy how quickly you got that profit, and then you just do the break even button, and then you just let the winner ride.
Yeah.
And
So
that 45 bounce at 811 would have been a perfect one, right? It bounced 3 to 5 points, you go to break even, and you never would have hit it. And then you could have just trailed off the 4 all the way up.
Yeah.
So it seems like the thing that I liked about it, I think the most, as I was playing around with it, was that the risk reward was a lot better. It wasn't so like pins and needles of like, oh my gosh, I hope this doesn't stop me out, but more like, oh, I at least got profit, and even if you're not quick enough, or let's say you don't even go to break even, if you go 3 to 5 points on a winner, you only have one contract left that's going to take a loss as compared to 3. And so I think that's the other thing that I liked about it too, is that not only is your risk limited because you're instantly getting into profit, but the second is if you do go all the way down to your worst level of 12 points, it's still going to be most likely on one contract. Worst case, it'd be 2.
Yep. Now let's just be clear. Okay, if this is an entry, we teach 12-point stop. So if we're doing this one right here, all right, from this line to wherever 12 points is, okay, this would be our initial stop loss, right, for a buy. Mm-hmm. As soon as we see this move from the line, not from your entry, hit your 8 points, you got to bring your stop from minus 12 to the fractal. Right. If you can get to 10 points or 12, depending on how fast it moves, you've got to bring your stop to break even.
Yep.
Okay.
Well, what was beautiful about that, though, is when I was getting in on the entries, like right at the line, I didn't really, even when I hit the break even button, I didn't have to adjust it much because it was virtually there to begin with.
Yeah, so that's fantastic.
Yeah.
So, I mean, you're doing it the technique you're saying when it's slower, or when you're a little more less skilled, maybe, or it's just smaller movements, because what we talked about, a low VIX and a low 1 minute ATR, sub 10 points per minute. We want to get 3 to 5 points, because what's the NQ for 1 point? MNQ is $2 per point. The NQ is $20 per point, right? So if you're getting 3 points off of one target, that's $20, $40, $60 for that first one, right? And then you're getting, what were you saying, 7 points for the next one, or 5 points?
Yeah. I did 5 points, but yeah, I mean, it's 160.
Yeah, so 160 bucks almost for your first 2 targets instantly. Yeah. You take that. Now let's put that in perspective, okay? So first of all, I did the stats for today. And just looking at the stats for today, okay, because I knew a couple people wanted to have this conversation. You can come through here and see everywhere where there is a pink circle and a number, okay? I say whether it's valid or valid. Just on the day for today as a whole, all right, we had 22 trades, all right? 22 trades, and out of that 22 trades, okay, there was only 2 of them that did not give us a full 10 points or more. And the 2 that didn't, we would have gotten off something if we used a 3 to 5 point target. You would have gotten those off, so you would have only lost maybe one of your 3 minis or micros that would have gone against you. And depending on how fast you can change your stop to either break even or to where the line is, you may not have lost it at all. So relatively speaking, Okay, we had a 90% win rate today. What does that mean? And that is with no risk. I mean, just look at these places. Honestly, no risk, no risk, no risk, no risk, no risk. All right, this stuff, I can take it to all over the place, showing you that all day today, that most of the time people are a little nervous, and it might be those one or two trades like what you saw happen to you that then prevents you from taking the next trade and have confidence in the statistics. But look at all these 9, 10, 13, or 11, 12, 13, 14. Look at these. Look at these. No risk. No risk. Without it bouncing. I mean, it's no risk. When you see these fractals develop, it is moving, all right, away from that line much further than most people actually think. 24 points. Okay, 14 points. This was a tough one because it only moved 14. Well, only 14. Was it gonna? You can, if you're going to be more delayed than 5 points, then you got to readdress how you're trading. Kind of like what we're talking about now, or what your target is. But each one of these has very clear entries that are hardly any risk at all. And when you take into consideration, okay, if we looked at this here, and let me just bring up the trade results page, all right. The trade results page actually shows a fantastic trade result. So a 90% win rate, but let's look at what those numbers equated to, all right? And where did I put that at? Okay, so if we look at this slide for backtest trade results from today, 90% win rate. What do statistics do? Well, the data tells the story so that we have trust in the system, so that we do not have a fear of taking a trade. We don't have a fear of missing out on a trade. We don't have a fear of the stop going against us, or the price going against us, or our stop getting hit. We have no greed, so we're not trying to get 1,000-point home runs all the time. 20 trades a day, all right? Use the system. Trust the system. What does that equate to? 20 valid successful trades, 2 invalid partial losses only. If you only got 10 points per trade times 20 trades, that's 200 points. On the MNQ, that's $400. If you use an ATM strategy of 5, 7, and 12, that's 24 points per trade. Okay, stop still at 12. 24 points times 20 trades is 480 points. And that's what you could get out of today very easily. That's $960 for the MNQ, or $9,600 if you got 24 points. Now let's just say, all right, we did 3, 7, or 3, 5, and what were you probably averaging out on? At 10?
Yeah, 10, because I would sometimes cut it a little early.
Okay.
If I saw it stalling out a little bit.
Okay, so you had your first one was going to be 3. Your second one was going to be 5, right? And then your last one would say, what, 10, 7? What do you want to use?
10. Yeah, let's just do 10, because because there were ones where it excurted and I'd let it go to like 20 points. So 10 is the good average.
Okay, so that's 18 points, right? 18 points times $2. Sorry, that was $18.
$20. So it'd be $360.
Yeah, 18 points times how many trades? Times 20, right? Times $2 is $720.
Yeah.
$720 if you did the ATM that you just said. 3, 5, and 10. All right, you multiply that by 10, right? For the MNQ, that's $7,200. So that's not a bad trade-off, no matter how you slice it, no matter which ATM strategy you're using. So again, the key is knowing what our volatility index is, knowing what our trade per minute is, creating something that's working for you with whatever kind of delay you may have while you're learning or practicing or getting more efficient. All I want to say is that no matter what you think, the statistics show you that even if you have 1 or 2, and I had 2, okay, I had that one at the very beginning in the morning where I tried to jump the gun a little bit right here, and it sliced against me, but I only had 2 that I messed up on. So out of 20 trades, that's not bad. Not bad at all.
Right. One thing I will say that kind of helped me as I was going through is I would listen to the on Bookmap. I'd listen to the tick strike, and if I noticed that we were getting to a line, but we were seeing an increase in the ticks coming in, I would skip it. Like I wouldn't even take even if I saw it stall a little bit,
You
I
mean like
just
if it's
skipped
coming
it because
down,
I was
like
like,
right here?
there's going to be another one in like a minute, so
Yeah.
I just waited.
Yeah. That makes sense. When you see or hear the volume coming in, right? It's about to get faster.
Yeah.
More volume's coming in. It's going to move quicker all of a sudden. Then
So
be cautious.
one question I was going to ask. So we had talked a little bit before we did this stream on this about the uh so again, making sure to judge the speed and rhythm of the market. So when you see, let's say price is coming down, it's getting ready to tag a bull 15. When you see, and I know it's not there's no perfect way to say like pay attention to this and this will work, but is it like a is it just like a pop pause, or are you looking for something where you've judged the speed with which price is coming down and you're seeing it slow to the line, like slow down as it gets closer to the line, or what are you doing to really help you judge the speed and rhythm?
Yeah, that's a great question. And let's look at what we have right here. Okay, let's look at this A-frame section right here. When you see price, okay, we have a couple different clues that helps us. When you see price going vertical, all right, there's no slowing down in this until right here. When you're seeing that kind of move with no back and fill, that's called an impulse move. All right. The same thing can be seen over here. And oh, by the way, we go from yellow to red to green. We just skipped the cyan, which is usually the transition from red to green, right? So it got really bullish all of a sudden. So you can look at the color coding of the candles. You can look at the verticalness of the candles. Look at this verticalness versus maybe this in here, right? Look at this
Yep.
kind of move. This is not very vertical, and this is choppy. So when you're seeing something like this coming up to a line, I'm going to be pretty doggone cautious about trying to short that because that is an impulse move on high volume, and it's moving at a pretty good pace, and I don't want to be catching a falling knife or a shooting star. And look, it went and popped up here before we hardly even stopped. Now look in here, and let me take away this white line. All right. We get a little bit of an impulse move reversal, a little choppiness. Then it comes down. We change colors. We use the term red over red. You're dead, right? It's kind of like shorting at the top. M for murder. Once we break down below the M, we're looking for price to continue down below the middle part of that M. So that's a little bit of technical analysis. We've seen the verticalness of our lines together. Look how close this 4 and 6 are. All right, very close. Look at this 4 and 6 over here. This is a horizontal 4 and a horizontal 6. This and price is moving much slower here. This is more of a move down. Look at this blue, white line and blue line. The 4 white, the bull, blue 6 vertical. So you can look at the close proximity to each other, their formation starting very close together as opposed to a 4 starting and then a 6 starting. 4 and 6 start very quickly. They're going vertical and they're tight together in spacing. Look at the color bars. Listen to the tick strikes that you say. And then decide this. Little choppy, boom, move. Little choppy, then you start seeing it start to flush with no movement in here. When you start seeing a leg of this happening fast, it's not time to try to catch this. What you would like to do is see a little bit of price action. Maybe you see this little hiccup right there, or you just start seeing more fractals developing, so you know it's kind of slowing down a little bit and not going to just shoot through a line. So those are just kind of the things I look at. I look at the ATRs, their angle, the proximity to each other. I look to see if there's no interruption in the candles being formed here. If I see no interruption coming into this, then I'm going to be like, watch out. Now, I actually broke my own rules today because I had another price target that I saw here, and I thought maybe it was going to bounce off of it with this 31 line. So I was using a little bit of confluence but that didn't actually work to help me out today. So, I took a chance, didn't work out. So those are just some of the techniques that you can use. Again, look at price coming down here. Yes, it slices through in this area right here. But what do you see after that? You see that it ends up bouncing down, and you start seeing it starting to get choppy. Then it comes down a little bit choppy. So you see this choppiness occurring between this line and this line. You see these fractals? So it means it's not going to probably shoot quite as fast through. Look at this. We don't have a lot of fractals, right? After this little one, there's no fractals in here. It's just a straight shot until you get to this lower fractal. In here, we have some fractals that are breaking up the speed of the action. So when you see that impulse move, this impulse move, don't try to counter trend trade against it. Don't try to catch a falling knife or a shooting star.
Yeah, and even when we did have some of those big impulse moves, what I'd start looking for is maybe like a first, hiccup around a 4 or a 6 to go short, and with caution, obviously, and a tighter stop, but those still worked really well.
Yeah, I want to point one other thing out. Don't forget to use our trender down here. All right, we have a combination of tools all into one thing here. I have put on here these numbers. Okay, the blue line has blue numbers, the pink line has pink. When we come down and we see something, we want to see at this point in time right here, we want to see that the blue line is crossing above the red line. All right, now that did not actually happen until later. Now it did give us a little bit of a fake out here, and then it came back and we got a little bit bigger one. So you need to use this in conjunction. So let's look at this one right here. All right, we got a fractal we learned to earn on the turn. We see the curvature and the bounce off of this. See how these are flat? It means it's coming down with force. All right, and it's going to probably bottom out against our discount line down here. So you got to kind of let it come off the bottom and reverse before you get into trade. And this is also something that will help. So you see it coming and bouncing down here. You see that the blue is crossing above the red, and we're coming off that discount line. Let's look at it right here. We see that the blue ends up crossing above the pink. Once we get the fractal, it's already coming off the discount line. All right, let's go over here and let's just look at a couple more examples. And sometimes, if it's not clear, then just wait. If we got 20 trades out of the day, we don't have to have all of them. If we got 5 to 10 of them, that's good. But looking at some of these other trades, look how good of a setup this is, all right? You can see it. It's a bigger line. We've come crashing through some stuff. We know that the rhythm of the market likes to move, all right, in certain price movements. And so from up here to down here, how many points is that? Well, that's a, whoops, I'm using the wrong one. From there to there is almost a 100-point move already. So, once we exceed 50 to 70 points, it moves in like 30, 50, 70, 40 point, 100-point moves a lot of the time. When you start seeing, by the time you start seeing 100 at one of our major support lines, you can start thinking it's going to change. So now I'm like, okay, I'm really getting ready here. I want to look and see a bounce. I want to see that at this point in time, I want to wait to learn to earn on the turn. So wait for that blue line to bounce off the red discount line and cross then blue across pink, above pink. See the fractal, and now look at all this distance you have to climb up. So that builds confidence in holding the trade and not being scared out of it. Now on top of that, your price action never even came close to coming back to retest that area. So a lot of clues here on these trades.
Yep.
Is that helpful or not?
It is. Yeah, no, it really does help. And I think, the more I was doing it, where I was just taking, when I'd see the line and see price get up there and take the line, like that to me was where I saw a lot of confidence in the moves. Especially as price was trending. That was another one too that was really helpful when price would trend and bounce off of a 4, being confident to take it there, and and even a couple times, not many, but a few times of kind of dollar cost, averaging in. If you really know that the move is going in that direction, that helped too, to kind of keep you out of trouble. The other thing that I'll notice, and I'll say this too, and then we can close it, but what I did like when I would hit a line, and let's say I got in and price it skirted above, right? Maybe it overshot it a little bit, and maybe it was like 3 points or 4 points, against me. It seemed like price liked to at least come back close to your entry, that if you really weren't feeling confident to begin with, you could just close it at break even. And yeah, you lose a little bit of commission, but I did that a few times, and it did end up saving me, I think, in the end. Just breaking even and going on to the next one. If you really aren't feeling confident.
Yeah,
but it's almost like it gives you that opportunity if you really are just patient for it.
Yeah, don't be afraid to get into a trade. Don't be afraid to get out of a trade. And there's times where, let's look at this. Okay, what do you have right here in this trade? You have it coming down. You're like, oh, get out. Pops up. How many points did that pop up? So you took this one probably. You were a little bit late in getting if you waited for fractal. That only moved 11 points. So by the time you're 5, it's coming up, 3 to 5 and then bouncing against you. And let's say at 8 points, which it hits here, you pull your stop to where this green line is. Okay, so now price, what does it do? Well, you might have gotten your 3 to 5 maybe. All right, maybe you got 1 or 2 of them. Your third one came down. It stopped you out. But you're on the first touch of this blue line. You got a triple bottom here. So maybe you wait a second and you go, oh, let's do some technical analysis. Don't forget to do technical analysis on these lines. This is a triple bottom, right? With what? A right-sided pivot roll.
Yep.
So here we have, it came down. I decided to get in on the first touch. It didn't bounce up very much. The algos go, yeah, we know that people get in off of these. We know what Bill Williams fractals are. We know people play the balances and then move their stops up. So we're going to come and take your stops out. Okay, so they took one of your stops out, or they took all 3 out. Fine. Then it bounced up. It came back down again. And now, out of an inverted head and shoulders, triple bottom, you're getting a right-sided pivot roll where you have a higher low. So now you go, okay, man, that's a good move up. I got the 4, 6, 10, 15, 20, and 45 line underneath me. That's a lot of support. I want to take that trade. So if it takes you out, don't be afraid to get back in again. Be a good sniper, because look what happens. If you let that one stop out, and let's just do this. How many points would it have stopped you out for? Okay, because you brought your stop there. So now you're giving up 2.5 points, right? Out of fear, and you're missing now, okay, a move that's going to come up to here. That's an 87-point move. Now, what time is this? 8:30. What did we also say this morning? We said that 8:30 was the end of the European market, and we could start to see the market reverse. All right? Mm-hmm. We had on our Navdar system, we actually had something that was telling us to go ahead and start climbing, looking for higher prices as well. So we had another component of our system. But just from a pure technical analysis point of view, yeah, this stopped you out for 2 points. But be smart, realize where you're at, what the rhythm is, where you think you're going according to your game plan, and don't be afraid to get back in. Now, what happens if you do this? We've talked about this before. 4, 6, 10. Lined up on the left-hand side. What do we see here? A 15 line backed up with a 20 line underneath it. Price comes back up, hits a little bit of resistance between the 4, 6, and 10 bear. But what do we have right here? So let's say you didn't get back in here because you were nervous Nelly about, oh, it's first touch and it stopped me out. Okay. Well, now this is one of those situations where you want to play the first touch, first pullback rule of a 6. Because we have the 3 lines over here, 4, 6, and 10. Now I have a 4 and a 6. And I have 2 strong lines providing support underneath me. And if you look at this price action, maybe this is a ABC type pattern, right? So we go impulse move up, flag down. So we need to understand some technical analysis. Flag down, Wyckoff spring bounce out of this. You see that move back up. You see it pull back to the first touch of the 6. Everything that we just said now, bottoming out here, we want to take the first touch of the 6. Even if we didn't get in here, we get in here. Very tight stop. But look where it goes. It doesn't even come close to coming back to your trade. And now you're able to get in there and try to ride a runner at that point for, keep pushing the wrong button, right? Even if you got in late, you're talking 68 points. What if you waited for this area to break out? So now you saw some resistance in here in this Wyckoff, and you wait to buy the breakout of the Wyckoff spring area, right? We know according to our Wyckoff spring, what does it do? It flags down, it bounces off of somewhere, we get a spring, it pops up, it does a retest with a lower high. So now from a Wyckoff spring point of view, you're getting a right-sided pivot rule with an ITS line backing you up. Now you can either buy that or you can buy the breakout of this restricted range that we're in right here. So multiple ways and places to get into this trade to try to get something out of it without letting fear run you, because it took you out for 2 points. Use other technical analysis to help get back into the trade.
Yep.
All right, I think what we'll do is we'll freeze this because it's been 40 minutes. And we'll say crash out for now. We'll see you guys later. Hit us up with any questions. Cheers.